Hello and welcome back to Next Coin Hub. Today, we're diving deep into the latest Bitcoin update because there's a lot happening on the charts right now, and we're at a very interesting point in this market. Bitcoin has been pushing into a major resistance zone, but what's important here is that we haven't yet managed to decisively break above the 61.8% Fibonacci retracement level. That means price is still hovering just below a very critical technical barrier. Now, for those of you who might not be fully into Elliott wave theory or find it a little complex, let me simplify. There's another tool we often use that helps give clarity: the volume profile indicator. Within this, the red line you often see is called the point of control. Think of it like a magnet. Price tends to be attracted to this level. On Bitcoin, that key level was sitting around $118,000. And guess what? We've basically tapped into it. Does that mean Bitcoin has to stop right here? Not necessarily. But this level was always one of the most likely checkpoints. And that's exactly what we're seeing play out now. Now keep in mind, this doesn't automatically mean the next big move is down. The fact that we've hit resistance doesn't automatically equal game over. Instead, this area acts like a decision point or a pivot zone. The real question is, will Bitcoin have enough momentum to break higher, or will we see a rejection that sets up a temporary correction? As long as we don't see a clear 5-wave decline breaking below micro-support levels, the local trend is still up. That's why, for weeks now, we've stayed focused on higher targets rather than panicking about short-term pullbacks. And yes, I know a lot of people get nervous around events like the Fed's interest rate meetings. Some even messaged me asking, "Why aren't you bearish before the announcement?" But the truth is, I don't build my strategy around guessing central bank moves. Instead, I follow the wave structures and price action. The charts tell us what to do, not speculation. Here's the reality. During resistance zones like this, caution is smart, but bearishness without evidence is just guessing. If we do see a confirmed 5-wave decline from here, that's the signal that a C-wave correction could begin. But even then, would that really mean the bull market is over? Not at all. Let's zoom out to the bigger picture for a second. On the weekly chart, Bitcoin is still holding nicely above the 21-week EMA. This has historically been an important short-term trend filter. Now, if we were to break below that, the next major support is the 55-week EMA, which sits around $95,000. This level has provided strong support throughout the current cycle. Interestingly, that zone also aligns with the 50% Fibonacci retracement level near $96,000, plus the 200-day moving average. So, what does this mean? Even if we drop to those levels, it wouldn't necessarily signal the end of the bull market. Instead, it could be a healthy pullback within a broader uptrend. For now, though, the local trend remains up. That's why I'm still watching closely to see if Bitcoin can stretch higher towards the next checkpoint, which sits around $1,400. If we zoom into the smaller time frames, like the 30-minute chart, we can see Bitcoin has tested our Fibonacci support zones multiple times and still held firm. The price channel we outlined previously is also being respected beautifully. In fact, we even got that extra push higher we were looking for, into the $117,000 to $118,500 range. This tells me there's still no strong sign of a top just yet. However, here's the key. If we do see a decisive 5-wave move down below yesterday's low, that would be a strong signal that the short-term top might be in, especially if it breaks us out of the price channel to the downside. But until then, upside remains on the table. If we do reach that $118,500 target, that actually lines up perfectly as the first ideal target for a third wave in Elliott wave terms. After that, we'd expect a healthy fourth wave pullback before another push higher, assuming support holds. The higher Bitcoin climbs here, the more complete this pattern looks, which naturally increase is the probability of a correction. But that's how markets work. Each leg builds into the next. What matters is watching how the structure develops and responding accordingly. So, what am I watching most closely right now? Whether we can hold support around current levels. If Bitcoin can push towards 118,500 and possibly even beyond. Whether we see a clean 5-wave decline, signaling the start of a C-wave pullback. If that happens, then support zones around 95,000 to 96,000 become the areas to watch for a bounce. To wrap it all up, local trend, still bullish, resistance, strong at 118 with more at 120,400. Support, layered between 96K and 95K, backed by major EMAs and Fibonacci levels. Bigger picture. The bull market structure is still intact unless we see major breaks below long-term support. That's the latest update on Bitcoin. If you found this helpful, don't forget to hit that like button, leave your thoughts in the comments, and of course subscribe to the channel so you don't miss future updates. For even more in-depth analysis, live streams, and direct community discussions, check out our membership links in the description and the comments. And if you want faster updates, follow us on X as well. Thanks for watching, and I'll catch you in the next one here on Next Coin Hub.